Scalping is fast, quick, and easy. You can literally double or even 10x your capital in a month or so by placing a big trade with high leverage and banking a small amount of pips every day. Sounds realistic? I mean, price could surely move your direction a few pips, right? And you could just grab them, isn't it? Well, I know it's very tempting to believe that. After all, making a few pips every day could mean quitting your job or not having to deal with that annoying co-worker. But what happens when you run into a series of big losses because of the high leverage and low reward to risk ratio? Well, the end state is an empty trading account. Now, I'm pretty sick and tired of hearing all the big claims about people flipping their accounts on YouTube because they ain't telling you the truth. So in this video today, I want to be real with you and let you know that it doesn't work like this. And the 10 tips that will hopefully give you the best chance of succeeding as a scalper. Now, I'm not against scalping, just to be clear, but I'm against people who make unrealistic claims to sucker you in and use it as a marketing prop to sell you something. So before I go into the first tip, please go ahead and hit that thumbs up button and subscribe to the channel, because I believe that many traders need to hear this, and with your help, we can reach more traders. We also do a giveaway worth $99, and if you want to participate, look for an emoji in this video and comment what the emoji is plus Forex signals. You can find the full instructions in a pinned comment down below. Now on to the first scalping tip, which is to avoid over trading. Many amateur traders don't recognize this, but they would often be better off if they traded less frequently and focus on the best setups. I will touch more about this in tip number 9, so be sure to stick around. And I get it, as a scalper, you want to feel the thrill of taking multiple positions and getting in and out. But here's the thing, what is exciting is rarely profitable. What is profitable is usually boring. You see the same setup over and over again and you take the trade and wait. You can tell how mature a trader is by how excited he is when he takes a trade. So don't be lured by the thrills of trading. Select the best setups and do your best to hold your winners as much as possible. And if you have experienced trading live money, you will certainly understand how easy it is to overtrade. Tip number 2. A position isn't a marriage. Never get emotionally attached to a position. It isn't a marriage where you should work things out. If a position isn't working, cut it and move on. Occasionally, I will get questions from subscribers asking about how they can remedy their floating losses. They might say something like, "Oh, my account is down 30% currently, what should I do?" And my answer is always to get out. The only thing to do when a man is wrong is to be right by ceasing to be wrong. If a person is asking what they should do, then it's clear that they don't have a plan, and trading without a plan is very dangerous. So, be emotionally attached to your wife or husband, but not to your positions. Tip number 3. Use a maximum of 2 to 3 technical indicators. When I first started trading, I remember falling into the trap that more indicators equate to higher probability. So I did what almost every newbie trader do. Learn about indicators and throw them all onto my chart. In this channel, I do cover some really powerful indicators like the MFI and MACD. But there's an extent where having too many indicators will result in information overload and cause you to hesitate when you should be pulling the trigger. This is especially so for scalping, where you need to pull the trigger fast. So stick to a maximum of 2 to 3 indicators and don't forget to focus on price, because indicators are derived from price. Tip number 4. Use a position size calculator to size your risk. Given that the scalper is gunning to secure small pips, it is typical for a trader to adopt a bigger position size. And while that's perfectly fine if you're using a tight stop loss, what is very damaging is if the trader doesn't use a stop loss, or worse still, chooses to hold their losses with a bigger position size. It is thus very important to apply proper position sizing, and you can use a position size calculator to help you calculate how many lots you should be trading. The common rule is to never risk more than 3% of your equity on a single trade. So if you have an account with $1,000, you should not risk more than $30 on any given trade. By keeping your risk per trade low, the scalper can sit through a couple of consecutive losing trades without blowing his account. And having a couple of consecutive losses is not something that may happen, it is something that will certainly happen if you trade long enough. Tip number 5. Stick to one trading setup when scalping. When it comes to scalping, you are probably taking multiple trades every day. It can get quite messy which trade belongs to which trading strategy. Imagine placing 20 trades a day and not remembering which trade belongs to which type of trading setup. That's chaos, isn't it? And as the saying goes, you can't improve what you don't measure. By sticking to one trading strategy or setup, you can eliminate this problem and tell whether it is working or not. After all, if you are scalping, there are tons of opportunities every day, so go deep into one strategy rather than hop from one to another. Don't spread yourself too thin in an attempt to catch everything. The market will always be there for you, but well, your money in a trading account may not if you don't do this properly. Tip number 6. Watch out for economic news. So, you enter a trade and 3 minutes later you're out with a big loss. What happened? Well, you traded 3 minutes before the US GDP data was released. Could this be avoided? Well, certainly. When scalping, you're using a tight stop loss, and remember that spread widens during economic data releases as the market makers look to take you up. So don't be a sucker and check the economic calendar. It doesn't take you more than 3 minutes. Head over to forexfactory.com. Don't be lazy, you work so hard to earn your money, so don't lose it just because you are lazy. Tip number 7. Scalping isn't for everyone. Let's be realistic. If you have a day job and a boss constantly breathing down your neck, scalping isn't going to be for you. Scalping requires more screen time and concentration. And when you're in a trade, you need to watch it like a hawk, because exiting just a couple of minutes late could mean the difference between making money and losing money. Personally, that doesn't sound appealing to me, and hey, there's nothing wrong admitting to yourself that scalping isn't the right fit. Part of being a successful trader is figuring out what works for you. So don't buy into the bullshit that you must scalp and trade every day to make money. There are many roads to Rome, and you can pick the one that best suits your personality and lifestyle. I mean, what's the point of making all the money if you're miserable trading something you hate? Tip number 8. Be careful of correlation. Because you are scalping and taking many trades, it is important to pay attention to correlation. Suppose you see long pound dollar, long Aussie dollar, and long Kiwi dollar. Well, should you take all 3 trades? No, in this case, the idea is the same for all 3 trades. Selling USD. If you go ahead to take all 3 trades with your usual risk, that's a 3x risk because the idea is the same. And if the dollar were to rise instead, all 3 trades would likely be a loser. So pay close attention to the correlation. If you must trade all 3, size them accordingly to diversify the risk. Do not enter each trade as if it was an independent trade, because it isn't. Tip number 9. Remember that scalping has huge spread costs. As a scalper, you pay the same spread as a swing trader. So a swing trader may make 100 pips and pay 2 pips spread or 2%. And then you have the scalper who pays the same 2 pips and closes the trade with 10 pips profit. That's a whopping 20% in spread cost. This is why you need to focus on the best setups and do your best to ride winners to extract the most out of each trade. Otherwise, turning a profit through scalping is going to be very difficult. And lastly, tip 10. Trade only during active market trading hours. Staring at a chart the entire day is silly. Not only does it make you tired, by the time the setup comes, you might have already fallen asleep. So the wiser way to approach this is to trade when the market is active, and that happens during the London or US trading session. And those are the 10 tips I have for you. Let me know which of these tips made the most impact on you. If you still decide that scalping is for you, then check out the scalping strategy videos that I've previously created. Thanks for watching. I'll see you around.